What does the money supply have to do with gold and silver prices? Well, we're going to talk about it in this video. M2 grows at fastest pace since February. And for those of you who don't know, M2 refers to the money supply. And this comes from Peter Schiff's website. And it's been a while since I've done one of these videos reacting to one of his articles. And we won't go through the whole article, but I just want to talk about some key points relating it back to gold and silver. So let's just get this brief paragraph at the top. Even as the Fed talked about tightening monetary policy, the money supply grew at the fastest pace since last winter. In the latest period, M2 increased by $263 billion. This is a major jump compared to the last 2 months and is the highest month-over-month growth since February. The same period is 2020. In 2020 saw M2 only grow by 62 billion. So what exactly is M2? So M2 is the representation of money supply that is, you could say, easily liquidated and also a little bit harder to liquidate. M1, you have a lot of money that's just easily liquidated. So that's just a quick and dirty way to think about it. Now, M2 has a pretty strong correlation with or I shouldn't say pretty strong, has a pretty positive correlation with the gold price. So it's I actually added this to my monthly forecasting gold price model here. So as you can see, I have CPI. Everything in the green are independent variables that I have as inputs. CPI, US 10-year Treasury note real yield, US M2, GLD volume. And in the yellow over here, I'm not going to show you everything there, but that's the actual forecast. And I'm going to give you guys this model soon. I just want to make sure that everything is ready for the launch. So I'm going to try to get other forecasting models prepared for you guys as well, so you don't have to wait. So I have silver created and I also have gold created. I'm going to work on copper. I'm going to work on Bitcoin. And I'm just going to maybe stick with those 4 as of right now. So let's go back to the article and go all the way down to the bottom here and talk about what this all means for gold and silver. What it means for gold and silver. Inflation is an expansion of the money supply that generally leads to higher prices. Now, this is an argument made by monetarists. And I guess you could also say Austrian economists as well. But this is something that was definitely kickstarted by Milton Friedman. And his view is that if you can control the money supply, you can control inflation. Now, in my view, I do think that there is a relationship there. It may not be the end all be all, but there is a relationship there for sure. Let's continue. Therefore, gold and silver prices can be used as protective assets to protect against dollar devaluation, higher prices. Money supply has been growing at alarming rates for years now and has absolutely exploded over the last 2 years. It is hard to imagine this will not bleed into the CPI in the months and years ahead, even being designed to understate price increases. Ergo, owner's equivalent rent. You guys know I've been banging the drum about owner's equivalent rent for months now. I was pretty early on talking about owner's equivalent rent. And for those of you who don't know, it's a metric that lags home prices. And we actually just got home price data from the Case-Shiller Index, another crazy month in July as far as home prices are concerned. So just expect OER is going to probably follow suit. Let's continue. If price increases prove to not be transitory as the Fed promises, gold and silver could be the biggest winners. With money supply growing like it has, transitory becomes very hard to believe. Now, in my view, I definitely agree with this. I do not agree with transitory inflation. The only way that I would agree with transitory inflation is if they change the definition of what transitory means. And it seems like that's exactly what the Fed has been doing by saying it may last longer than what we originally thought, yet they're still using the word transitory. So they're doing a little bit of, switcheroo there by not really changing the word they've been using, but changing the meaning and the definition of what they've been saying. So just watch out for that whenever you see the Fed talk about transitory inflation. They basically have kind of changed their tune, but they haven't changed the word they use to represent that change of tune. Basically, imagine if, you know, Ooh Baby Baby by Smokey Robinson, the song, the title was still Ooh Baby Baby, but you heard Michael Jackson's Thriller when you hit play. It's like, oh, well, technically, it's still Ooh Baby Baby, but the song is different. That's basically what's going on here. So let me know what you guys think about all this in the comment section below. Do you think that M2 has something to do with gold and silver prices? And do you think that we should expect higher CPI and gold prices in the future? Not right now, but in the future. Let me know what you think.